Good morning traders and welcome to the daily call today, Monday the 6th of February. Before we get started, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, so let us have a look at the final session for last Friday. What happened? We had in China, the PMI number came in at 51, pretty close to the forecast. Essentially, this helped the Aussie dollar maintain its status as the best performing currency of the week that's just gone by. So good week for the Aussie dollar last week. We're moving along to London, and we had a PMI number at 55.5, again close to the forecast, but essentially in the UK nearly all of the latest economic reports that were released last week were disappointing, with manufacturing, services and construction slowing, consumer credit dropping, and essentially the data was bad, and basically it seems that these are the early effects of Britain's decision to leave the European Union. So, and more than likely with more weakness to follow. So keep an eye out on the sterling. It's still ranging in a particular zone. It hasn't broken back out and hasn't fallen either. So all eyes on that. Of course, Friday in the US was the highlight of the week. We had non-farm payroll figures coming in. Essentially, the non-farm payroll employment increased to 227,000 in January, and the unemployment rate was slightly changed at 4.8%, which was pretty close to the money. But the big question is, with so much extra jobs, why did the US dollar weaken when it should have perhaps increased in strength? And essentially the answer to that is the lackluster wage growth in the US, basically signals to the Fed Reserve that they may need to pause an interest rate increase in March. So investors took it that way, and essentially the market reacted. As we can see here from my chart, what I've highlighted is the 15-minute period of non-farm payroll release, and we had a variance of around very close to 100 pips in that period, with initially going up at the 227 number, and then the impact and the realization of job growth coming in, kicking down, and further down recovered, and this morning we've opened here or hereabouts. So we will need to see what is said, what comes out of the Fed Reserves regarding if they still plan on a 3-rate increase for 2017. All right, so now it is time for the chart of the day, and the chart that I have found for us today is a 4-hour GBP USD. So we're looking at the cable this morning, and as you can see from my chart that we have essentially 3 clear touches on this support line, and that's 1, 2 and 3 over there. So the line is solid. We have seen the market bounce off this line, so now the question mark is, can we do it again? All right, at the time of my screenshot, the 4th candle, we can see that we've essentially created an inside candle situation with these two, and then another one with these two. So essentially I've got 3 inside candles of each other. The current candle has not opened at the time of my screenshot, so what we're looking for is the current candle to open somewhere in here, break this high, and then we would trigger into the trade. So there you have it, GBP USD on a 4-hour chart. That is the chart of today for Monday the 6th of February. All right, so what do we have in the session to come? It is a lighter one. Mondays typically a little bit slower. The highest impacting news that we have this morning is retail sales in Australia at 11:30, so it's in about an hour and a half my time right now. Of course, this is Australian Eastern Standard Daylight Savings Time. Later on, after lunch, lower impacting news in China, the services PMI, the Caixin services PMI, and this evening, again, this is not higher priority news, but it's a German factory orders number at 6 o'clock. That pretty much wraps up the session. As always, please feel free to contact us. If you have any questions, follow me on Twitter at ChatFX for trade setups and breaking news. But most importantly, I hope you all have a fantastic trading day, and I hope you join me this afternoon at 3:30 for a full in-depth 1-hour analysis of the markets of the whole week. Let's see if we can get some trades off. I'll see you then. Bye for now.